The TFSA is a tax-free savings account. As you invest money in that account and it grows over time, you get that money out tax-free. But one of the questions that's always been asked from day one of these accounts back in 2009 is, what happens if I'm a bit more active on the trading? Is there a way to actually create a business out of it and CRA sees it as a business and thus I don't earn that money tax-free? Well, there hadn't been any case studies go through the court until recently. And I want to cover that off in this video because someone was left with a very hefty tax bill that they weren't expecting. And my question here and my challenge for all of you is, are you trading too much? And hopefully this article breaks it down here for you. Now, this article, the person that got fined is an actual financial advisor, planner, call them what you want, but they're in the industry. Did that play a factor? It doesn't say that it did. The judge's ruling didn't say that it did. It was more on the transaction, the type of transactions, how frequent they were, and all of that. So I want to release this because we hadn't had any case studies to this point. This gives us some precedents and what you can and can't do in your tax-free savings account. So let's jump into the article here, and you'll see here, this is the one from Advisor's Edge. We'll link it below. But basically, CRA said that they came out and said, sees frequent trading activity in the TFSA. And now, what is frequent? They don't really break it down, but they do go through the article saying, taxpayer contributed the maximum allowable $5,000 in 2009, which was the first year of the TFSA account. Did the same in 2010 and 2011. By December 31st, 2011, his TFSA had grown to a fair market value of $617,000. So, I mean, this is a great problem to have, but it's now a huge problem for this individual. So again, big gains, and you wonder, like, how can you put in $15,000 and grow your account to $617,000? Quite speculative, obviously. So in January 2013, he liquidated the securities and transferred nearly $547,000 to himself on a tax-free basis. So again, if you think common sense, we all know that the tax-free savings account wasn't created for this type of system. Put in $15,000, buy highly speculative stocks, they do well, you make over $500,000 tax-free. That was not the purpose of the account. Bit of a red flag here. So as we go back into the article here, we'll see, they basically CRA went back and reassessed from those 4 years, 09, 10, 11, and 12. The tax assessment was based on taxable income, $44,000 in 2009, $180,000 in 2010, a huge year, $330,000 gain in 2011, and a smaller gain in 2012. But again, large gains overall. So when determining whether the taxpayer gain from securities constitute carrying on a business, and this is where it becomes very important, the CRA considers a variety of factors which include the frequency of transactions, the duration of the holdings, the intention to acquire the securities for resale at a profit, the nature and quantity of the securities, and the time spent on the activity. So obviously there was a lot of digging and homework done into this in the case to figure out, the duration of the holdings was quite short, so that by default then creates a high frequency of trading. And obviously this person spent a lot of time. Now again, they were in the industry, so they probably had the time to do that. Now again, this rule is in direct, the consequence of doing so clearly spelled out in the Income Tax Act, which states that the TFSA is generally exempt from tax on its income, subject to two exemptions: holding non-qualified investments or carrying on a business. And this is where this one comes into play. It's the carrying on a business. So this rule is a direct contrast to the rules governing the RSP or the RIF. When it comes to these registered plans, the Income Tax Act exempts both RSP and RIFs from paying tax on business income. Well, the reason for that, very simply, is if you make a large amount of money in your RSP, which we've had clients, they bought, let's say Tesla stock as an example, for $100,000 and now it's worth $3 million. If you do that in your RSP, when you pull it out, you got to pay tax on. So CRA gets their piece of the pie. When you do it in a tax-free savings account, they don't get their piece of the pie. So that's going to be a factor that comes into play here. So as we go through this again, it's RSP, TFSA, they're two different things. Yes, they're both registered accounts, but they work very differently. So in responding to this argument, which is saying, so he argued that there have been no legislative purpose for making TFSA taxable in the income for carrying on a business of trading qualified investments when the RSP carrying on the very same business is not taxable. Again, they're trying to make the argument saying, well, this happens in an RSP, can it happen in a TFSA? Of course, the TFSA, again, CRA doesn't get their tax money. They want their tax money, and rightfully so. In responding to this argument, the judge noted that the government made a deliberate choice. Had Parliament also intended for exempt from tax a TFSA's income from carrying on a particular type of business, trading qualified investments, Parliament would have legislated accordingly, just as it had done for the RRSPs. So in conclusion, the judge concluded the taxpayer, a professional investor with deep knowledge and experience in the securities. Now, don't get me wrong. I highlighted this a few times in this. This person was in the industry, but I don't think that that's the reason that this person kind of was caught in this situation. It was the frequency, and what that frequency is, it doesn't talk about in this article. I haven't found any like that, but it's a high frequency, a high amount of trading, obviously, and holding the stocks for not a long period of time. So again, if you're concerned about this, if you think, hey, this might be me, like I put 5,000 in 2029, in 2010, 2011, and I've made hundreds of thousands. Like, do I qualify for this? I would do some digging into this case. I would talk to your tax accountant and just make sure that you're running your TFSA properly. Again, growth is good. You're supposed to grow your TFSA over time, but should it go from 15,000 to 600,000 overnight? Probably not.